All right, guys, welcome. We are here at our first ever Kings of Lending podcast for 2024. And we have none other than Naomi Bazin here as my co-superstar. Super excited. And we're going to have some fun side chat. And are you excited?
So excited to talk with the CEO of Kings of Lending, Victor Salazar himself. Good guys, ready?
Yeah.
We are ready.
Yeah.
So one of my questions, as I became working with you, I was, fascinating looking at your work, how you work, your system. Obviously, the way that the mortgage is structured. As a foreign that came to this country, I had no idea how the mortgage works. I remember a few years ago, I called a real estate agent and I asked them if I can buy a home. They literally rejected me straight away. They only gave me 3 options. And then after I met you, I find out there's so many options for loans. There's so many opportunities. How come that you can do it? Can you explain me that? How did you get there and what's so fascinating? Why you are so business oriented? Why you are so driven? And how can people like us, like foreigners and other people, get to maybe know you or know other lenders and get all these opportunities of building wealth?
Wow.
That was a very long question.
A great question. So fascinating to know, anybody that, comes to the United States that wants to build wealth with home ownership, definitely a goal, definitely a goal for everybody. Why? We're paying rent. Why not put it back into your pocket? Is our theory. The question is, how can we get you to that finish line? Most foreigners like yourself come to the United States. If they can't get a green card and they don't have a social security, they're given a ITIN number for them when they come to the States. So those borrowers, those people that want to buy eventually, they can with the ITIN numbers only. And what's fascinating about that is most lenders, most banks particularly, they don't lend to anybody with 3 to 5% down on those loans. They want a little bit more collateral. They want to make sure that you can afford the mortgage payment, that you have a stable job. If you've been self-employed, they want to know that you've been here in the States for at least 2 years, file taxes for some investors. Now, there's other programs we could definitely get into where a little more flexible. And that's why today is going to be super important, because you got a lot of great questions, got a lot of great answers. But more importantly, those are higher down payment options. They want to make sure that if you, for instance, can't make the mortgage payment, the bank could still have a little bit of money behind them to sell the property and recoup their investment. But we could get into other strategies where clients are able to come into the United States and still have an I-10 and still buy with 3.5% down and 5%. And if you're a self-employed person, right, you come in and you file 1-year taxes, they're going to want to also see a profit and loss statement. So they want to know how your business is performing. And that's super unique because not a lot of banks know or will do this. But here at Kings of Lending eMortgage Capital, we're partnered with the best partners, and we always have a plan to get you to the finish line.
Awesome. Honestly, I'm going to make sure I'm going to promote this one for all my friends, foreigners, because it's just so hard to come to this country and start everything from scratch. And if you don't meet people that actually are educated enough to be able to help you, you are just stuck. My other question was, how come it is so difficult to get a loan if you have multiple jobs? In my head, I will assume, okay, I'm coming to this country. I get as many jobs as I can.
Wait. Hold on. Wait, you're coming to this country. Where are you from, exactly?
I'm actually from Poland.
Okay.
Made in Poland.
Made in Poland. I can hear the accent.
A lot of Spanish influence. I spent many years in Spain.
Okay.
But I immigrated from Europe.
Sure.
So in my perception, I will assume that I come here, I get 3-4 jobs, as many as I can. I'm a good employee or whatever, I make money good for United States, and that will qualify me for buying a home easier than a person that have a 1 job. So how come it's so difficult and so many lenders is struggling to give a loan for a person who have 3 or 4 jobs?
It just comes down to knowing how long you've been in those jobs for, and that could be used to qualify. So most times banks, they'll deny people because they haven't had 2 years of history of both of those jobs in line with each other. And so that determines eligibility. Now, a lot of these loans, they want to make sure that, and these underwriters, they want to sign off that you've been stable, you can afford the foregoing mortgage payment in the future with the income that you're receiving. So, looking at the past definitely, presents a good path for the future for income, and we want to make sure it's stable. So 3 jobs, 4 jobs, yes, we could use that income to qualify. It just we're going to want to see at least 2 to 3 years of history receiving that is consistent. But let's face it, how many of us are really full-time salary and can have 4 jobs? There's only a few industries I know of personally
Me too.
that will give you consistent income for the course of 3 to 4 years and can be used to this day to qualify. And that's it's unique scenarios, and we come across it here and there, and it comes across frequently in the tech space too, with
That's
our
right.
clients in the tech world, a lot of
Software guys, the smart
software
guys.
developments. Yep, the different time zones. So a lot of companies work on different time zones. And actually, I can share a quick story about what you just mentioned. Is I have a borrower right now, that's someone that applied for a mortgage, that is using 4 jobs to qualify for a home loan. And a lot of banks were saying, hey, we can only use 2 jobs, but it depends on the investor's appetite. And that's where we as professionals know who wants that appetite to serve that loan. And for instance, this investor or client, 4 jobs, as long as it's for 3 years or longer consecutively, and is shown on taxes, and we have W-2s to support income, in this case salary jobs, then increasing pre-approvals is what we do.
Awesome. So let's talk a little bit about a market, about the real estate market. What the heck is going on?
What do you mean? Yeah.
Happening? We know we've been through a lot. Now we are 2024. What are the best steps to take this year to be a homeowner? How can we find good real estate agents? And how would we know we work with a good real estate agent and mortgage professional?
This year presents a lot of opportunity.
Woohoo!
This past month, before 2024, we saw the most aggressive interest rate drop that no one has even talked about. I mean,
Crazy.
we're talking about like 2008 rate drops, increases like overnight. And most
Roller
people,
coaster.
rates are trading in the 8%, high 7s. And then literally rates started dropping and people were on vacation holidays. And what that did is that increased people's affordability to purchase. So now, lower rate, lower payment, they could qualify for more home, or vice versa. They want to buy the home, now their payment got cheaper, more affordable. So I guess what I'm saying is now into 2024, like a lot of people aren't talking about it because they're coming back from vacation or they're still on holiday. Like the inventory is still slim, which depending on your state or your county or wherever you live, there's always going to be a great deal as long as you work with a professional that is guiding you in a way where it's not always about the rate, it's about the strategy. And if your real estate agent is educated and they can help you navigate the process seamlessly with, obviously real estate is not seamless, but let's face it, if there's a way for you to feel confident when you're looking at homes, agents are aware of strategy. Like for instance, if agents are not, doing research on condominiums, where people want to buy a home, and we know that they're going to be using a government loan like a FHA loan or a VA loan or USDA loan. If the agents aren't doing research on those properties like prior to going to show those clients homes, those agents are perhaps not doing the best service or best best job.
Happen actually very often, and it's very disappointing actually, because buying a home is like one of the biggest purchases of your life, and if you are not associated with the best people, you can really fail on that one, right?
Yeah. I mean, and it doesn't.
Unfair. I feel like it's unfair. Like everybody deserves the best service in this point.
A lot of these realtors, they have a lot of backing behind them, depending on who they're hanging their license with. They've
Okay.
lost support on the back end. So when it comes into a transaction, they have their transaction coordinator. They have their team leads to help navigate them through their contracts. So there's no run, nothing's never not going to be unseen, but making sure things are done up front, not giving people a giant roller coaster through the process. That's something we don't want to do.
Associated with real estate, it should be
roller-
RR. What RR stands from? Real estate roller coaster.
Yeah, so roller coasters are meant for kids, not for real estate.
So I have a actually very important question. Again, as a foreign, as a blonde girl, could you explain it in the most simple way so people I don't say like me, but like me actually can understand? So when rates went up, people will say, buy now, refinance later. In my head, in the past, before I educate myself, I thought, well, if it's 8%, I'm not going to buy. What's the logic to buy now and, pay more monthly, pay more interest? But then, I started educating myself, obviously, seeing, your work. And then I understood, buy now, refinance later. But can you explain it in a simple way so everyone can understand what's behind the system and how they can protect their money?
Great question. I love the fireside chat here, and you're on point. And that's probably the question that everyone's going to know. And it's a question that a lot of people can, and they think they can answer, but I'll make it very simple. A 30-year mortgage is not meant to be a 30-year deal. A 30-year mortgage allows a payment to be stretched over for 30 years. Does it mean that, maybe 2 or 3% of the United States stays in that mortgage? Maybe. But I would say 90%, 95% of people, they don't stay in that mortgage for the life alone. Actually, statistically, it's 5 years. Every 3 to 5 years, they change their mortgage.
Wow.
So knowing statistical data, that's going to make a decision on buying initially. So when people are talking about 8% interest rates, 2 to 3 years, they're probably not going to be in that home. They may want to relocate. Their family might be upsizing. They might be getting a new, family member to the family, or they want to move school districts.
But what about refinancing? Let's say now it's 8% today, and in 1 year it's 5% or 6%. How would that work for me to buy with 8% and then refinance? How would that save me money? Does the refinance cost? How much it cost? Tell me more about it.
As long as the market allows for a lower interest rate, we just reapply for the mortgage loan. And most of the time when you do purchase with us, right? When you purchase with us, we have all your data. The only thing I do need is your updated pay stub. So the banks want to know that you are still working, and they want to make sure that your payments have been made on time. So as a mortgage, you can't be late. No 30-day lates. We don't want to see that. We want to make sure that you're still able and being responsible as well in credit. So what happens is that the rates go down, rates go up, and in the event you purchased a home in a high interest rate market, as long as you made 6 on-time payments, you're eligible to activate a refinance. And so that's what people do. They look for the opportunity, and when the opportunity arises for a lower payment, we refinance. You get a lower rate.
I like it. So what is your opinion about all this news that we have no inventory, and once we're going to have dropped the rate down, the values of the property is going to go up pretty fast and a lot? What's your opinion about that? Do you think that's going to happen? Is there a big chance? Are we going to run out of inventory more than we already are? What do you think?
I just think the cost of living in California, because we're here in California, we're speaking in California, Irvine particularly. Cost of living, every day it's going, it's increasing. So as people are changing environments, that's going to determine the inventory in that subject area. So I think from what we're seeing here today, inventory is here, and it's not like more homes are getting built in Newport Beach. If the area is already saturated, there's only one beach.
There's only one line.
But what's unique is that a lot of other newer areas, developing areas like new build homes, they're building brand new properties, right? So we're being developed.
Vegas.
Exactly. So, you find somebody that wants new amenities. They don't want to live in an area they're paying $3,500 in rent, and it's an old house, no windows. We're talking
Terrible.
shaggy carpet.
And you don't
Like
wanna
you
go
got a
there.
great you got a great view of like nothing like in your house.
Wall and next
Yeah,
wall.
but you're 5 minutes from the beach. So there's give and take on what you I think what we're going to start to see actually is a lot of renovation loans being executed in these higher cost areas, which is also going to keep and retain these values of properties. Because let's face it, coastal areas that are already developed but need a little facelift, like some lipstick on,
I
we're
know.
going to see more renovation loans for amenities being renovated, energy efficiencies. Whereas if the people can't afford, that home yet, right? Yet, because there's always a way for us to get you there. It's starting with something. So sometimes sacrifice, having to relocate in an area where, if you can have the opportunity to relocate your job or if you're a business or you're self-employed and you can work remote online, then I would highly recommend looking at a place to start building wealth and maybe it's a brand new home.
Yes, we recently saw a lot of people moving out from California actually to Las Vegas. I saw in the news that only in month of August it was 5,000 people emigrating to city of Las Vegas, which actually this data is crazy. I don't blame them. We all know what's happening there, but
A little
it's
bit of fun.
yes. But from what I know, you are also doing loans in Nevada, right? What are the states are you doing loans in, and which is your favorite, and what's the most fun about it?
Wow, great question. So personally licensed California, Washington, Arizona, Texas, Nevada, Virginia, and Florida. And the newest state, and I'm waiting for my friend to call me because I know he works for a builder, Colorado. So I got it for him just in case he wants to give me a call and help any client that can't get approved for the in-house lender. I got their back. So just know I'm gonna call you out when you're call. I'm gonna call you out when you see this video, this podcast.
I
But yeah,
love
so I'm licensed all those states. Out of all of those, my favorite. I mean, I like California.
California,
California.
home.
Yeah, it's my home.
Are you from here? From where?
California.
But where?
Huntington Beach.
Huntington Beach.
Yes.
Nice. You got lucky.
Yeah.
I came from Rzeszów.
Yeah. Well, originally, technically,
Rzeszów, but it
I
was
say
so fun.
I say Huntington Beach because a lot of people don't know where Fountain Valley is, but for the ones and the OGs that are from Orange County, they know where Fountain Valley is. Went to Fountain Valley High School and relocated Fountain Valley to Huntington Beach for some time, and then just segued around there before I started traveling and competing and traveling the world doing what I used to do.
I heard you were a BMX superstar. Is that true?
I wouldn't say I would say that's super. I was a BMX pro, professional, and I did a lot of cool events. I traveled multiple countries, and I did that for like 10 years. And I would say I was home in California 2 or 3 months out of the year.
So, question: how did you find out the idea to move from BMX pro to mortgage pro? And obviously, we already know you are the best in BMX, and now you are the best in lending, which I love. Like, but how that happened?
Transition wise, I started to realize that over the course of my injuries,
Those bones.
those broken bones hurt.
They don't
And I'll tell you what, I'll make a phone call any day and get rejected, and that will not hurt as bad as the pain that I went through
Oh,
physically. So, like, I could be told no, and that's okay because I'm still going to help you. You're working with someone else, I'm still going to help you. But what really transitioned for me is just the future. I wanted growth. I wanted something more. I wanted to start building wealth real estate, and I wanted to help other people do that too. So, as an entertainer for the longest time, being with Cirque du Soleil, that was a crazy experience. I got to entertain thousands of people every single night and beyond stage in front of thousands of people and just perform the highest level, which created a lot of training and a lot of foundation for the business that we perform every day now here. The segue really was just to help others.
I actually know you are a very kind and genuine person, so I'm really lucky and glad that you got into this industry because I see a lot of potential in United States of people that, as a person who was rejected and wasn't even, my case wasn't even seen through, I was immediately rejected. And I'm thinking, like, if this few years ago, this person actually be educated
Aw.
and help me to guide, maybe today I will own 10 properties and, my life will look different. But I'm doing really well anyway, so I'm really
Sure.
happy. Awesome.
So that's kind of how the cookie crumbled for me, getting into real estate, which,
What's
it's
your
a cool blessing.
advice? What's your advice for new loan officers that are just getting into the industry?
Wow. You gotta have
Strongest questions.
big cojones. And if you don't have big cojones, we'll make them big. No, right? You know, I, you just want to have something new. You want to change, and you got to be ready for change, and you got to be ready to learn, because in this industry, you're never ever stop learning. Like, it's an ever growing business to be in. And I didn't really believe it to be true until I got into it. And I'm like, maybe like 2 more years in, I'll like know everything.
Yeah.
Markets change, guidelines get updated. Clients that didn't get approved last week are now approved this week because of this XY. Market rates are changing. So if you're a new, you know, person that is thinking about getting their license, biggest advice to give to you is just never give up. You got to have the drive. And if you don't, and that's okay. A lot of people don't. If if you can't take, learning as a benefit and wanting to grow and better yourself, then it's going to be fine whatever you want to do in life.
Is that true that you actually supposed to start from a real estate agent and then you actually end up in mortgage? How'd that happen?
There's a lot of different avenues when you transition to become a loan officer, right? You could become a real estate agent, get your real estate license, and then segue into mortgage, get your mortgage license, or get your NMLS license. You know, for me, I came straight into mortgage. I knew what I wanted to do.
Okay.
From BMX, I was still traveling a lot, and I wanted to work remote. So one that checked off the box,
I love it.
working remote. That
Yes.
was a huge driver to why I did what I started to do.
I can see all these memes on Instagram of all these loan officers and realtors on the boat with the laptop, on the surfboard with the laptop. It's actually hilarious.
Yep.
You are one of them for sure.
You know what? I made make a video.
Pictures down.
Make a video of me surfing somewhere and then sitting on a chair that's strapped to the longboard and typing in and say, "Hey, you're pre-approved."
Yes.
No, but yeah, that's kind of how it goes. You don't have to work remote, right? You come in the office, like we're here. We're in the office, and
Of
that's I
eMortgage
prefer.
Capital in Irvine.
Irvine headquarters, eMortgage Capital, #1 non-delegated lender in the nation. We're here to help. Yeah.
I love it.
So, yeah, if you're new,
Are you planning on staying for long in mortgage? That's your end goal, or what's your other plans?
I'm here.
That's it.
Yeah.
For life.
Sure,
I love it.
sure.
Where do you see yourself in 5 years?
Still helping. Growing teams. So, we just recently onboarded a new loan officer that's in the Bay Area too.
Ooh,
Yes.
congrats.
Yes. So we're here. We're only bringing on managing partners.
Awesome.
So, loan officers that have, a good experience in a book of business that they could refer back to and serve their clients. And we're all about a team effort. So we're all about understanding, like, hey, how can we get, and serve more clients under our umbrella? And, we're all referral based. So if we do a good job for our clients and serve at a high level, that's how our business is derived, right? A lot of people don't understand is that it's not me that just gives you an interest rate, right? We serve you what the market rates are trading at, depending on that specific day. And so you could decide what rates you could choose from. And depending on what kind of offer we set up for you, if you bought a home with your real estate agent, right? If we gave you, and we always give you the option of what a seller buy down looks like and how that could affect your monthly payment. So if that wasn't structured in the offer, then you may want to help, speak with a realtor that could help you do that as well.
So my favorite question is, and I love your answers about that. Hey Vic, what's the rate today?
Oh, I love this question. It's not about the rate, it's about the strategy.
Woohoo! Now we're talking. Can you explain it to other people why rate, it's actually not as important as strategy? And what are the options for the strategies for average person?
Average person, most of the time, people that want certainty, if they have questions, they want communication. And if the loan officer or anybody in the profession that they're going to do business with, they want to make sure that they're going to be taken care of and they're not going to be lied to. So that's number one. That's the biggest fear is people don't trust you yet.
I don't blame them.
You know,
Especially in United States,
a lot
it's
of
hard
people,
to trust people, and it's hard to trust professionals, and it's hard to do business. So this is all right.
yeah, that's why people shop people. It's not
Yes.
about, I could say whatever I want on that initial phone call. I could say I have the lowest rates, blah, blah, blah. But then if I give them a loan estimate once they get in contract and I don't go over strategy with them and don't go over options, then I'm a liar because it's not going to be as low as they thought it would. Or maybe it's not, it's perception what people think.
Yes.
So when it comes down to communication, we set the expectations clear. And that's their decision on what rate they get to choose. Because it's not a rate that I give you, it's a rate that they choose.
Awesome. So they actually get to choose the rate.
Yeah, of course.
That's amazing.
Yeah. And once they got their offer accepted, we scheduled like a quick 15-minute powwow. I like the powwow call. Super fun because we're always hyped up. We're like, hey guys, like, what's the next steps? And I'm like, this is what's going to happen. Quick, high level overview of the process so I could break it down and digest it so they can understand when they're going to get their appraisal payment link in their email so they can pay for their appraisal. When their loan contingency is up, so we got to make sure the loan underwriting is all good with their updated documents they give us. And then, of course, making sure that appraisal comes in at value at a later time. But the options up front, they get to choose the rates. So depending on what the market rates are trading at that day, right? If it's, let's just say a 6.5% rate, a 7% or a 7.5%, they get to see the different options. And of course, maybe the lowest option might have a higher, what we call cash to close. Maybe that might not fit their budget at that time. Maybe they might take the higher rate because it's less out of pocket. So it just depends what they want.
So I'm very curious about this one subject in particular.
Okay.
I
Bring it on.
Let's do it. Let's go. So I heard these horror stories about people losing their deposit when they are in escrow. How this happened and why and who they should blame for it and what the heck is going on over here again?
Well, it's far and few between that when people actually lose their earnest money deposits. There's so many different parties that are involved for you to not lose your earnest money deposit. So the only time that really does happen is when it doesn't have your best interest, or
Are we
maybe
speaking about real estate
real estate
agent, buyer,
agents,
seller,
lender,
broker?
yeah, like I've only heard this story, like buyer was working with like seller's agent and the seller was representing the seller. So they're double ending the deal. So the dual agency, we call it dual agency.
Whoa.
And I'm not saying like seller's agent that's representing you has your best interest, but a lot of things can be overlooked. Whereas a buyer's agent directly one-on-one with you and like you guys are on a team, they're always looking out for you
Yeah.
to know when like timelines are due. Because in a contract scenario, there's certain timelines that need to be met and adhered to in order for us to keep proceeding, or else we're not in line with our time frame. So, for instance, like one thing that someone could lose their earnest money deposit is an appraisal, right? If you're like, let's say a conventional loan and you write on your contract saying that, hey, I'm going to buy this home no matter what the property comes in at value at, right? And if it doesn't come in at value, right? And if you wrote on that contract that you got accepted, that you would buy the home, whatever the price was, and let's just say the value came in 50,000 less,
Then
right?
that's it.
And then the buyer would have to come in with the 50 grand, right? But let's just say they didn't have the 50 grand to come in with, and it's already past that 10-day period, right? Technically, the agent should have to give a notice to perform to the other agent, the buyer's agent, saying, hey guys, like you haven't released your contingency yet, right? So if they release their contingency and somehow the buyer can't perform, right?
When
Then
they
they
have
could
no money
lose.
to add, right? When they have no
Correct.
more money.
Correct.
Okay.
If they can't perform,
Wow.
and then they've already released it, like after 48 hours, if they were given the notice to perform and they didn't perform and they didn't back out, then technically the seller can keep that earnest money deposit.
Wow.
So that's why it's important to have an agent that's on your side that's like, that knows that timeline. Because if you get a notice to perform and you know you can't perform, you still got 48 hours in the state of California
Wow. Okay.
to perform. And if you can't, if you put it in like 24 hours after, be like, hey, okay, we're going to cancel, we're going to back out, you're going to get your earnest money deposit back. But it's after 48 hours and you don't perform, that's when it gets a little spooky.
Wow. It's
You'll
actually
never get there though with us, because I'll be calm. But guys, we gotta,
you'll be on the hood.
we gotta make sure you're protected,
Wow, that's actually pretty wild. Like no one actually talk about it, and I don't think people know about it until they get burned. I don't think it's happened. Is it happening often, or it's like very rare?
I heard a story in Florida actually, like a close friend. I looked into a scenario that actually happened to them, and I'm not going to mention any banks' names, but it's Mortgage. I don't know. Mortgage. They said that they were approved, but they weren't really approved, and they were past their timelines of loan contingency, and they they lost like 25,000.
Oh my God, so sad. So explain me that also, because that's something that it's showing up on and off. What's the difference? Why some people think they're pre-approved and then they find out they're not pre-approved? And why is it happening so often? And how we can avoid that? And what is this?
Sure. Yeah. So when you get pre-approved with us, we go through looking at your documents up front. So we do a lot of the
Upfront work.
upfront, the uncertainty. We take on that obligation when you work with us because we want to make sure that when you're shopping with a real estate agent, that you got kids, you got twins, they got bunk beds to sleep in at when they buy the new home. We can't tell somebody you're not approved after saying you are approved, and it's part of our practice to always make sure we give certainty.
Right? High ethics.
Yeah, I mean, people will say, oh, on our loan application you made 20,000, but really on your pay stub you've been working part time, and you made $3,500. We pre-approved you for $1 million loan. Like that didn't make sense because they didn't look at the docs. So you got to look at docs. We got to make sure you're pre-approved, and then we actually we take it one step farther as we send it through an automated underwriting system that gives us a condition list of what updated things we need to see. In a nutshell, like boring wise, like we understand like what to look out for. And then we take it one step even farther. We get a live underwriter to review the file. And that's called a conditional approval. And our loans go through conditional approval before that approval letter is issued. So we can know what we're up against as if we were in a contract scenario where we got your purchase, agreement in play.
Pure prevention.
Pure prevention.
And preparation.
That's how a lot of times like our transactions, like our clients can win offers because we become more attractive. I'm not just saying that just in general for us as a team, Kings of Lending, but we could write aggressive timelines. I know the loan's good. I've underwritten it by my team. The live person signed off. They have their license on the line. And we close loans in 10 days less.
Wow, I love it. That's the fastest loan you got approved, or what's the fastest? I think there's one little
7 days.
7 days. Wow, like a God built earth in 7 days and get approved loan in 7 days.
Yeah. So loans, there's certain loans that we could close sooner, like some refinances. I've got like obviously same day clear to close.
But I understand, like for that, you need full collaboration on the side of a buyer, which means
we need
to deliver
communication,
all the documents, and stay in touch. Okay.
Yeah, so we send out requests. I have a loan partner and a loan team organization behind us, behind the scenes, that we communicate through. And so if there's anything that we're missing for document wise, like we're just like, we set the expectations up for you. Like you want certainty. So like you come to us for certainty, and in order for us to give you certainty, you also have to help us help you.
Exactly.
So sometimes, going through your computer, going through your online payroll to find your last year's end of the year pay stub because your commission, we want to see the average commissions you made. So like helping me helps you. Yeah.
I think this is the part that like customers, I will assume, because I'm this kind of person, like
Yeah.
I hate delivering documents.
Yeah.
And it's just such a headache. And when I hire people, I just want them to get it done. But when they ask me for the documents, I'm like, why don't you do it
Yeah.
for me? Just take my laptop and do it.
Yeah.
But I think like, yeah, a lot of people feel this way. But that's what you got to do if you want to get the stuff done, right?
So yeah, you got to just step up and, be the CEO of your own business as as one that's going to get a home loan. You're going to be building wealth long term and, excited to help everyone else that wants to get on and enjoy the ride.
I love
Be
it.
fun. So
I love it.
awesome. Well, I'm excited, Naomi. Any other questions for us before we depart?
Actually, my last question was, what's the most crazy story that you went through working in mortgage? The most crazy client or the most crazy story or maybe some lawsuit or something because I am sure it's happening.
Yeah.
You can share in public.
Oh my gosh.
Share.
Okay. Well, can't leave any names because legally we have like.
Let's say
Yeah. This one's cool.
whoopee.
This one's cool. And it's actually something that no one's really ever seen before. And I gotta tell you, it's something that I would never even think could happened. And all of us, when it happened, like we're like, oh my God, like, what do we do? And even like everyone else was on the back end that was like, we've never seen it. What do we do? I said, well, like, what we got to figure it out. Who's gonna, So long story short, here's what happened. It was a summer night. I'm kidding. No. There's a lot of build up here, but really, you want to listen to this one. We helped our client purchase their home all the way through the whole transaction, right? Appraisal order came in, everything, seller communicated with the listing agent. And at the end of the transaction, there was some friction with the seller and the seller's agent, which means that they couldn't get a hold of the seller. The seller's agent was calling us like, hey, like there's something going on. We closed the transaction. Our buyer funded. So the loan got funded. Our buyer had signed their loan documents, and then we were waiting for the county to record title. Last minute, the seller called the escrow company and was like, hey, cancel it.
Whoa. How
And
come?
we're like, how? Like, how come? How can you can't just cancel a transaction? You guys already signed. You guys already signed the agreement. We're all
Yeah.
dialed in. Like, this is the final stretch. And actually, the loan, like I said, had funded. We recorded title. And after the county recorded, they're called. And they're like, hey, we're going to undo this transaction.
Whoa.
And we're like, you can't just, like you said, we can't do that.
Yeah.
So what had happened is that the agent who was representing the seller, apparently the seller, had some sort of dementia or some sort of problem, which I'm not familiar with, but from what I was told, the buyer's agent had let me know that there potentially may be some elderly abuse in this transaction that we were not aware of
Whoa.
until the end of the transaction. So long story short, there was actually some litigation going on with the agent to the seller, saying that, hey, if we don't close this transaction, what's going to happen is that we're going to sue you as a seller. So the homeowner that's selling the home, the agent's entitled to their commission, but really, like, who's going to win this battle? Because at the end of the day, if the seller is saying that they have elderly abuse and they have dementia
Wow.
and they have medical records to prove it, what's going to happen?
Wow.
There's going to be some sort of, like unethical conduct of business, and that could also be reported to their license. And, it doesn't look good at all fronts. At the end of the day, what was right happened. We unrecorded title, so the county unrecorded title. So we put the name back. They put the name back into the seller's name. Our buyer got their loan refunded. So we refunded our warehouse line, credited everything. Our buyer got their earnest money deposit back.
So you guys saved.
So like we saved, we always do what's right at the end of the day. And we made sure the seller was, of course, taken care of, which they always should be. And at the end of the day, like whatever happened to them later on, like I hope the best for the sellers. But we never end up going with that transaction. But our buyers did buy another home about a month later.
Oh, awesome.
Yeah.
Awesome.
So.
That's actually wild. This is not something you would expect.
Yeah.
Wow.
Typically, when you record title at the county, the transaction's done.
Done. Wow. Awesome. I guess there's going to be many, many more crazy stories in the future of your career.
Yeah.
Since we are all people and we do crazy story stuff.
That's right. Well, till next time, thank you for awesome questions.
Thank you so much for
Hitting me
attending.
left, right, left. Ready for the next one. Till next time. All right.
Thank you.
We'll see you.
Bye.